Hi, I'm Jeff Brady with Roundtree Brady Insurance here in Savannah, Georgia.
What are the biggest mistakes first-time buyers make when choosing insurance?
Buying on premium alone. The biggest mistake I see people make is they're trying to squeeze into a payment. And the reality is insurance is only getting more expensive. More events, more claims, cost more to build a house. So what's going to happen is insurance rates are going to go up some. And so knowing that you're just buying simply on premium, what happens if there's a loss? Do you have a 5% deductible? I'll give you an example. I'm working with a gentleman right now, right? Lives out on Wilmington Island. He came in, he wanted to get a quote. And first thing I told him, I said, do you realize that you have a 5% wind and hail deductible? It's a $17,500 deductible. He had no idea. Because he bought purely off the premium. He was paying for price, and that was all he was worried about. But now if he has a loss, he's basically self-insuring for his roof. And that's a big expense, especially if you're a first-time home buyer, for example. You think about it, we're talking about payment, right? But after you close, heaven forbid you have a storm. We have a bad summer and fall with wind or hurricane or something like that. Are you prepared to be able to cover that deductible? Are you prepared to be able to maintain your home? But people, they leave out, they cut their additional living expense. They don't include water and sewer backup. We have a lot of older homes in Chatham County. Building codes coverage is huge, and people don't think about the fact that, I've got a 60-year-old house, and the codes are very different today than what they were 60 years ago. So if you have a claim, yeah, you have a deductible, but what happens if you have to replace the windows that were damaged because of something? Or you have to put on 3/4 inch decking as opposed to the 1/2 inch decking for your roof that you've got. Well, if you're paying for coverage without building codes, you're gonna have to pay the difference in cost between what was there and what you have to put back in. Hurricane clips, you have to upgrade electrical, that sort of stuff. That can get expensive, and it's on top of your deductible if you don't have those coverages.
If you were buying a home in Savannah today, what coverage would you not skip?
If I'm buying a home in Savannah today, I'm going to make sure that I've got adequate flood coverage. I think that's extremely important. The nice thing about at least what we have available is we have a number of private market options too, which means that we can get more than $250,000 that FEMA offers. The private options also give you additional living expense coverage, which you can't get through FEMA. So let's take the Richmond Hill flood. Okay, so in 2024, during Hurricane Debbie, area down near the Ogeechee floods, right? There were a number of homes that took 12 to 18 inches of water. Even if they had flood insurance, which a lot of those property owners didn't, it was sunny day flooding. You think sunny day flooding, what in the world? Well, we had the storm came through, rained inland, all that water came down the Ogeechee River. Of course, the other thing that happens twice a day, high tide. Tide comes in, water comes down, the immovable force or the unstoppable force versus the immovable object, they come together and it spread out. So these homes flooded, right? Well, those folks take 18 inches of water, they've got a $100,000 claim minimum, if they've got coverage, right? But even then they have to move out. Well, guess what? There was no home insurance involved. So the private market options give you, in many cases, you can get the additional living expense if it's from flooding. It's replacement cost on your contents. You can get higher limits. So it's not just the $250,000. How many houses do we have in Savannah that are under $250,000? Not many, right? So, the fact is you can protect yourself better, and in many cases, the premiums are better than what you pay with FEMA. So you get better protection, you get more protection. The other mistake or thing that you just have to make sure that you're getting is make sure your policy actually includes wind coverage. I've seen that a number of times. I had a client or a prospective client out at the landings, and we were talking about her flood insurance, and I mentioned to her, I said, well, we'd love an opportunity to review your home insurance. She said, well, I'm not sure you can touch my premiums. I said, okay. It's like, well, I'd love the opportunity. And she said, well, I'm only paying, I think, $1,000 a year. And this was a $600,000 house at Skidaway. And I said, that's a great premium, but I'm really concerned that you're missing something here. And so we went through it, and in her policy it said, wind exclusion included. She read that as meaning that the wind was included, but the exclusion is included. She had no wind and hail coverage. So if a hurricane comes in here and 4 pine trees get blown down on her house, she's got nothing. Yeah. And she actually chose to keep the policy, which was amazing.
Should sellers review their insurance policy before listing?
That's an interesting question, because you think about people coming in. Hopefully you're working with a strong team, like the Heather Murphy Group, Team Callahan, and they're going to have staging. They're going to be looking through that. You're going to declutter the house. Ultimately, home policy is going to have liability in there. I recommend strong liability limits whether you're listing a house or not, simply because it's typically very inexpensive to increase your limits. But knowing what your liability protection is, if you've got, somebody trips over a sidewalk, that it could be an issue, and it's busted up, those problems, you could be liable for that sort of stuff. So make sure you're maintaining your home first and foremost is a plus. It's going to sell better. But also, reviewing that protection. You should be doing that on a regular basis, no matter what, simply so you understand what your protection is. But it would never hurt to make sure that you've got appropriate liability coverage, especially if you're going to be doing that. And it's cheap, to be able to increase it.
What happens if a home becomes vacant while on the market?
Yeah, so vacant, if you go back to insurance licensing, so there's 2 terms that we consider: unoccupied and vacant. All right, so occupancy is obviously a big thing when it comes to rating insurance. Whether it's tenant occupied, it's owner occupied, is it a secondary home? Now, unoccupied means that it's still got stuff in it. So, somebody may have had to relocate for work or whatever, but maybe they haven't moved everything, they're in temporary housing. So it's there. But when you talk about vacant's empty, right? Nobody's checking on it. The concerns about that is most vacancy clauses are going to be 30 to 60 days. Once it hits that vacant, that timeline, then basically you start losing some coverages. Things like vandalism, theft, potentially even water coverage, so busted pipe, because there's not somebody there to keep an eye on it. Insurers, having somebody there means that you can stop something if it does happen. I've seen it where a water line busts, and next thing you know, it's been going for 2 weeks. Could have been mitigated. There's so much more damage, and the insurers are saying, well, wait a minute, nobody was there. This could have been prevented if somebody had been there, and that's why they put those provisions in. Now, you can buy vacant policies if it's going to sit for a long time. We've seen it with estate situations. So somebody's has unfortunately passed away. They're selling it. They're trying to settle the estate. We can go in and we can find some vacant coverage, but it's not cheap. It's definitely more expensive in those situations. So obviously, if you can improve your timeline and a move, that can be extremely important too. And a lot of insurers, they just don't price for that type of risk. That's not the way the policy is set up. So they have that in there. Same thing if somebody's buying. So we see it a lot of times. They buy a house, and it's going to be their primary, but it might be 6 months to a year before they move in. And so the challenge that we face is that the lending company, if there's one involved, they want to see a homeowner policy, but the insurance company wants to see them move in within 30 days. And maybe they're doing renovations. Maybe they're going to tear out the kitchen, put a new bathroom in. Well, now we're dealing potentially with a builder's risk or vacancy. And so those are totally different situations. So we have to get a little creative at times, and sometimes it's a matter of getting them in the door, and then, we have to see what's going to happen because timelines change. And, so we have to be nimble in that situation. But we try to educate them on the front side and have that conversation up front to say, hey, look, this is the concern. How can we work on this together?
Can prior insurance claims impact a home sale?
So typically, we're not looking at the seller. Now, let's say the seller had a wind and hail loss and they didn't replace the roof. Now, it's a totally different thing. So when we go so a buyer comes to us, we're going to pull a clue report. The clue report's going to tell me claims that the buyers had. It's also going to tell me what's called unmatched claims. So an unmatched claim is going to be that typically for the structure itself. The only reason I use that is if I see something, a big claim, for example, on there, and I can see that it's a wind and hail loss, I'm going to go to that buyer and say, hey, it looks like they were paid out on this. Have they replaced the roof? Because if it's been assessed to have had damage and they didn't replace it, which surprisingly enough, people do that, then maybe that's a piece that they have to have a conversation with the seller about. But as far as claims from the seller, that's not something that is typically of concern for us unless they haven't done what they needed to do to the property for which they had damage.
Are sellers liable if someone is injured during a showing?
You can be liable for a lot. And so it depends on, obviously it's going to be investigated. If somebody were to get injured, heaven forbid, they're rushing out of the house, and there's a kid's toy, or maybe the floor was wet. Somebody comes in and they slip on the floor and they fall and they injure themselves. Absolutely, you can be liable for that. Again, that's why reviewing your coverages and understanding, that what you have in place is important. But also, making sure, again, having a strong team that's going to keep an eye on things and make sure they're on top of it is there. But put your dogs up, take your dogs with you. If you don't want your dog to bite somebody, something like that. Those situations do happen. Yeah, you're liable for that.